Alright, in this video I'm going to go over an idea that you may have heard recently about Activision stock, ticker symbol ATVI. You've probably heard about the trade that Warren Buffett is doing called an arbitrage trade. Now, arbitrage usually means the difference between what you're going to pay for something and what you know you can sell it for. So it might be, for example, that you're looking at something at a yard sale and you know you could turn around and sell it at a flea market for more. Or you pick something up at a garage sale and you know you could sell it on eBay for more. Well, in this case, the idea is that you can buy Activision stock at a certain price today with a pretty strong expectation that you'll be able to sell it for more or get cashed out of that stock for more in June of 2023 if the deal goes through where Microsoft is able to buy Activision for $95 a share. In this video, I'm going to talk about the pros and the cons, and then what I'm deciding to do as far as this deal. What's the strategy? In case you're not familiar with Activision, it's actually called Activision Blizzard, and it's a global gaming and entertainment company that's well known for franchises like Call of Duty, World of Warcraft, Crash Bandicoot, Diablo, Overwatch, and Candy Crush, and many, many more. One of the things that Activision does really well is cater to the gaming community to where it has hundreds of millions of monthly active users who are playing their games. One of the reasons you may have heard about this idea is because of Warren Buffett. Warren Buffett famously announced just this past week to his shareholders, the shareholders in Berkshire Hathaway, that he had greatly enhanced his investment in Activision. He already owned some, and yet he added a whole lot more recently to his position. And the reason this stands out is because Warren Buffett is famous for being a long-term, buy-and-hold, deep-value investor. And this, in particular, is a strange deal for him because we know that the plan is for Microsoft to buy it out completely in 2023. Now, one of the things that Warren pointed out in his announcement was that he was okay owning Activision at this price regardless of whether the deal went through or not, which is in true Warren Buffett fashion. He's looking for a deal that works out both ways. And so the question to me is whether at first glance or not it looks like a good deal. If it's good enough for Warren Buffett, shouldn't I consider it? So we're going to look at the pros and the cons, but in this case, I'm going to start with the cons. So the cons are the risks that the deal could possibly fall apart and not go through. All right, I'm going to have to try this again a little bit. Apparently there's a dog nearby that really doesn't want to hear about the Activision deal. I hope you guys don't mind. I really like spending time outdoors, and I spend way too much time indoors. And so whenever possible, I like trying to shoot outside, and hopefully you enjoy seeing a different background than just my office or a room in my house. Okay, so reviewing the risks or the possible cons to this deal, there are really three ideas that I'd like to focus on. The first two involve the Federal Trade Commission. They have to review the case before the deal is made. And so the first has to do with the idea of creating a monopoly or anti-competitive situation. And in this case, while Microsoft is an absolutely massive company, I don't believe before or even after the acquisition of Activision, they're not going to be a monopoly in the gaming space. Now, they do have Xbox, they do have their own platform, they have a lot of different things at their disposal, but it's not like they own so much of the market that they're going to create a monopoly or anti-competitive behavior. And they've even announced that they don't want to just bring in those titles from Activision and make them uniquely on the Xbox platform. They want to continue to allow those to exist on the other platforms, which of course would be the exact opposite of anti-competitive behavior. The second thing that the FTC is going to review is likely the workplace environment scenario. Now, you may be familiar with Activision having some complaints in the near past about workplace situations that were not very good. And the truth is, Microsoft as well has kind of a checkered past, but further in the past Now, the good thing about this is Microsoft has overcome those things and has created a situation where they have a reputation for being able to create a good, positive work environment. And even, for example, they've brought in other companies that have had trouble in that way and have shown that they're willing to replace leadership or replace HR departments to create a better environment in the departments that are run by these acquisitions. And so hopefully Microsoft is able to navigate those conversations with the FTC and show that they're willing to do what it takes to get the Activision staff completely on the right path if they're not already. The third thing that could cause an issue is there has to be a vote, simple majority vote for shareholders to sign on to this agreement, and I don't see that as a major risk. In all of these three areas, I don't see them as a major risk. I think the most likely problem could be a political one. When you talk about the monopoly situation, I don't think that's a real obstacle, but depending on who's involved, it could become a political issue. And I would hate to see it block the deal, but it's a possible risk, and so we should identify those as investors. Now, the thing to be aware of in any case, no matter what would cause this deal to fall through, if it were to fall through, there's a couple things to know. One is that Microsoft will be liable to pay Activision up to $3 billion if there is a problem with the deal. But on the flip side, investors should be well aware that the stock price is very likely to crash very hard if this deal doesn't go through. Now, that really doesn't depend on the fundamentals. That can be just sheer emotion, and how long that emotion plays out to keep the stock price down is anybody's guess. I think the stock price is relatively close to what it should be valued at anyway. So if the deal were to fall apart and suddenly Activision has $2 or $3 billion added to their balance sheet, that would only help their case. But we also need to factor in the fact that the entire rest of the market has been going down, down, down for months and months and months, especially companies that are tech heavy like Activision. And so it would be very normal and natural if this deal falls apart for the stock price to just literally crash to an absurd level. And so investors need to know that that's a risk, even if it's very unlikely. Okay, so now let's talk about the pros or the benefits to doing this deal. Today, the stock price trades at about $76, $77, $78 a share, and the deal is expected, if it goes through, to close about June of 2023, just a little over a year from now. So that would represent about a 20 to 22% increase, and along the way, Activision does pay a dividend, so you would collect a 47-cent dividend per share while you're waiting. Also, for those of you who are using a regular money account, who have to think about your tax implications whenever you buy and sell, if you were buying before June of this year, then if the deal closes on schedule, not early, you would actually be in the long-term capital gains category by the time it gets cashed out. And so that's a positive thing as well. Now, you would have to factor in, if you're selling anything at this point, then of course you're going to have to think about the tax implications on that side. So the question is 20, 21, 22% over the next year a big enough price tag to get you interested? To be fair, when the deal was announced in January, it wasn't enough for me. In fact, I owned Activision at that point, and I made the decision to sell out. Man, if I could only go back, right? But at that point, I looked at it. My goal is to crush the S&P 500 every year. And so my goal is 20% or more every year, year after year. That's what I want to get. And I've done much better than that on some years, but that's kind of my level that I'm looking for every year. So when you're looking at the deal and you say, okay, if I keep the stock from January 2022 to somewhere around the middle of 2023, I'm going to look at a 19 or 20% gain during that year and a half. That's subpar. That's not what I'm really looking for. So I didn't want to lock up my capital for all that time and guarantee a lesser result than what I'm going for. And so I made the decision to sell. Now, let's rewind, and I want to tell you a little bit about my journey of investing in Activision. So I actually began investing in Activision back in November of 2019. My first purchase came in at $54 a share. And I would gradually add to the position, adding a couple shares here and a couple shares there each month through June of 2020. In July of 2020, the stock had hit about $80 a share. Now, when I make an investment, a lot of times I have a target value that I believe is a fair value for Activision. And I remember calculating that and thinking that the fair value was somewhere around $70 or $75 a share. And now the price had risen above fair value. And that doesn't mean that I always sell. But if you remember back in July of 2020 and put yourself in my shoes, there was COVID on, COVID off, lockdowns on, lockdowns off. There were all kinds of situations in the stock market that I felt like were presenting a much better opportunity than this particular stock that was overvalued over my estimation of its fair value. Not grossly overvalued, but when compared to other stocks that seem to be trading well below their fair value, I wanted to take that capital and apply it in other places. And so between July of 2020 and September of 2020, I sold off my position completely. Now, looking at the price chart, I wish I could say that I held off and I sold when it peaked out over $100, but I'm not a genius. I'm not that fantastic. I did take a nice little gain and I cashed out and I went away for a while. Now, about 1 year later, in November of 2021, Activision started having problems again. This was when they were having news story after news story about how awful the work environment was at Activision. And so I started buying again around $60 a share. Over the next 2 months, I started making regular additions to this position, buying more and more stock at usually between $58 and $61 a share. My highest purchase price during this time period was $67 a share. Again, despite the recent news, the bad headlines, I really felt convicted that the value of Activision was at least $75 a share as a business. And so I thought over time I would easily see about a 20% increase. But I expected to build this position over time, collect the dividends along the way, and one day when Activision was trading at a premium price, be able to cash out and move on. Well, that day came on January 18th when they announced the deal with Microsoft. And you can find it very easily on a stock chart because the stock price went from about $65 a share to $82 a share in one day. So again, remember, my goal is to beat the S&P 500 index year after year after year, and my goal is to do 20% plus. So when I looked at that, even though I realized Microsoft would be acquiring the company at $95 a share, that was still a big increase, I was going to have to hold that stock and wait for a year and a half to see it play out. I just felt like it was a better deal to go ahead and cash out my position. And so very quickly, I liquidated over the next few days my entire position in Activision again. So what am I doing today? Am I just going to follow Warren Buffett and go for the same trade? Well, it has nothing to do with Warren Buffett, except I wish that he would have done it sooner so I could have thought about it sooner and realized the opportunity here. You see, we've been watching the entire market go down, 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 month after month. And when you look around, where are you going to hide your money? What are you going to invest in that you really think in the short term is going to go up? Now, for long-term investors, yes, it's always safest to just hold on for the ride down and the ride back up as long as we believe that we have really high-quality companies that are going to adapt and overcome and in the end are going to grow more than the rest of the market. And that's fine. But if there's a way to park your money in something that's going up or treading water when everything else is going down, 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 and you're using a tax-sheltered account like I do, wouldn't you rather invest in something that has a floor? And that's the situation that I didn't see. And now I can see it because Warren pointed it out that with Microsoft saying that they're going to purchase the company at $95 a share, they've kind of created a floor, not a hard floor, but a pretend floor, as far as the lowest that Activision price will go, as long as the deal is still in play. Because if the price falls too low, it creates a much bigger reason, a much bigger margin for that arbitrage. More people will buy it back up, and the price will stay close to that $95 a share. So at $77 today, I'm building my Activision position again. Hopefully, third time's the charm, right? So I've gradually started shifting some of my funds. Now, here's the thing. Over the past 6 months, as the market has been going down, a lot of my stocks have been getting hurt as well. And so what I've done in my portfolio is I've consolidated most of my capital into my highest conviction companies. The companies that I believe, no matter what, they're going to succeed, and they're going to succeed greatly. And so I've gone from about 35 different tickers in my portfolio down to only 15. And these 15 I feel very strongly about, and I don't want to give them up. But as time is going on now this week and over the coming weeks, I'm going to build a considerable position in Activision. Because if I don't see this downtrend turning around, why am I going to watch all of my stocks just bleed their value away when I have a company that I would invest in anyway? I believe in them. I've already invested in them over the past couple of years. I'm quite happy to own Activision, even if the deal falls apart, just like Warren Buffett. And so why not park as much of my capital as I can in something like that that's not going to go down considerably over the near term? And then as the rest of the market hopefully someday finds a bottom and starts coming back, I can shift that capital back into other companies that I think will have a greater upside if the case presents itself. So I make these videos to help other people learn from my experiences and my mistakes. And in this case, the lesson that I've learned is that I need to be aware, especially during a downturn, to keep an eye on deals that may create situations where a company that I am okay with holding, but may not have enough upside to really get me excited during a downturn. If there's a situation like this where they may just tread water or even go up a smaller amount than my true overall goals, to be open to the idea of doing this kind of arbitrage. A similar example that also happened recently was when Elon made the offer to buy Twitter. One of the things Tom Nash, I'll give him credit for it, he pointed this out, and I never would have thought of it. When Elon Musk made the deal offer to Twitter and he named $54 a share, suddenly he created a ceiling where no one was going to let the price go above $54 a share anymore, right? Because who would want to pay more than $54 a share when, if the deal goes through, that's the most that they're going to get cashed out for? So I'm learning through these experiences that there's kind of a level 2 to trade psychology and just fundamentals and technicals and social arb investing. There's also situations like this where the deals can create a sense of a floor or a ceiling that, depending on the situation, maybe they can really help us. All right, I'd be interested to know, do you own Activision? Are you buying? Or are you selling? Or do you think the whole idea is just silly? I'd love to read about it in the comments below. Until next time, have a great day. Decide if it's going to lead to anti-competitive or monopolistic.
Really?